Alright, it's our Saturday morning review of the Portfolio Calculator update and a review of the trading week. A couple of updates I want to share with you. First of all, the highlight of the week is what we're trading right now is one of our strongest weeks of the year. It's been a tough start to the year, and we've transitioned into this since February the 4th, about 8 calendar days ago, about a week's worth of trading. We finally transitioned into this. We were trading the micro portfolio NQ20. Now we're trading some micros on the stock index portfolio 40. Even in the 200K, we're still trading micros because this market is very volatile, and that volatility is deceptive. And when you have 40 strategies and this kind of volatility, 200K might be still a little bit small to trade regular E-minis. So this setup, let's go to the Calcs tab, and you can see how it's done this week. It had a bad week last week. We started this on February the 4th right there, and we were trading the micros, and we transitioned to this on the 4th, and last week it went through this losing streak. So it was a good week to start. We started on Friday, February the 4th, down 981 per micro. This is listed for E-mini, so divide by 10, minus 981 per micro, minus 193 per micro, and then just a nice trading day, nice 4 days in a row, 388.50, 829.25, 731.25, and $1,300, 1306, and so good trading week overall. The trading week, based on the portfolio calculator results, was up about 3,062 per micro, 3,062 per micro this week, and so good trading week on that. Working on turning this around. We had massive volatility at the beginning of this year. Our best strategies became our worst strategies, really needing to scale back quickly. And I love this portfolio setup because, and you can see how it's done. We called a drawdown alert too earlier this week. So if you look at the drawdown curve, it was down here, now it's up here approaching an equity peak. So it reversed. So far it's reversed right here at this point that it does. It can draw back to about 40K regularly, and the worst case drawdown in the last 10 years is about 50K. And a lot of the strategies that we're trading right now are more relevant than they were when the index value was much lower back here. So you can still see the results back here. It goes all the way back to a $92,000 drawdown back in 2008. Even though that was a bear market, like we may go into, that was a much different type of market. The index values were different, and you can see this drawdown curve. So much more relevant strategies currently, but even in the past it would show this, and that would be 9,200 per micro if it was. I recommend being willing to risk at least 50K if you started at an equity peak, willing to risk 50K per E-mini, 5K per micro. This is listed in E-mini, so divide by 10. So if you were trading this on the micros, you want to be willing to risk this worst case drawdown right here, which is back in June of 2016, I believe. June 22nd, 2016. So you want to be able to, sometimes that worst case drawdown gets tapped, and then sometimes it hits that worst case drawdown and runs. And so you want to be able to withstand that worst case drawdown and be able to hold a little bit. So you want to start in a drawdown. It's in about a $500 drawdown per micro, or $5,000 per E-mini, and then be able to withstand that. In the last, say, since mid-2016, the worst case drawdown is about 40K, and that level held this week so far as it bounced and the market sold off. We had some nice trends to the downside, and here is the let's look at the stock index portfolio 27. So the way we came up with this portfolio is we took the 19. There are 19 E-mini S&P strategies in the stock index portfolio 27. This has been one of our strongest portfolios, and it just tapped its worst case drawdown this week, and it's bounced. And we took the 19 E-mini strategies from that plus 1, and we took the 20 NASDAQ strategies from micro portfolio NQ. And so let's look at this setup here. This is down on the year, minus 58.95. January was down, but it is so it's down about 16K on the year. Very strong, 2021, but it's took this worst case drawdown. It tapped this worst case drawdown in February of 2021. It's held really well. It's tapped it this week. It's tapped that worst case drawdown. It's bounced a little bit. Our strongest strategies have been the Nasdaq, and so this is heavily weighted toward the E-mini S&P, 19 E-minis, 8 E-mini Nasdaqs, and so we are focused on stock indexes right now. A lot of these other portfolios have additional markets. Those have been difficult markets to trade. Don't have a solution. Don't always have a solution for the way those markets are trading. So you just pause trading a market until you understand a better way to trade it. This is the 500K portfolio. You see it's bounced 30K off its worst case drawdown. It includes many strategies. It's very aggressive, and you can see how it's hit that worst case drawdown. The second thing I want to show you this week is the CVX Indicator, and so we've added the CVX Indicator to this portfolio calculator. I haven't fully tested it, and one of the things that I would consider doing is stop trading if the CVX is greater than the CVX threshold. And the CVX threshold is this, and it's defined by the number of 1/3 of 1% turning points divided by the VIX in one day. So we have that CVX indicator right here. It's our zigzag indicator, basically using 1/3 of 1% divided by the VIX, and you get the CVX here, and it's been added to the portfolio calculator, and it shows up right here in the last column on the calcs page, and it is at 1.34 as of Friday. And the only thing that this does is if the previous CVX is greater than previous day's CVX or the current day's CVX is greater than 1, you don't trade the next day. But the way this is set up is that it always trades on Monday because the previous day's CVX is Sunday. And so my goal is to remove Saturdays and Sundays from this workbook. The thought was to keep Saturdays and Sundays because of potential Bitcoin cryptocurrency data over the weekend, but I don't see myself doing that anytime soon, so I won't be adding that. Cryptos trade on the weekends, and so I don't plan on doing that right now. This is just for future, so I'm going to be try to find an efficient way to remove Saturdays and Sundays from this workbook so that we can get a more accurate CVX reading. This is brand new. This rule is brand new, and if you add it, it really improves some of these portfolios. If I add it here, this worst case drawdown goes from 73,000 to 42,000, and so it could be good. I've just added it though. I'm not completely done testing this, so if you want to do this, you can, but know that it may change. I may change the formulation on the CVX rule. The formula may change. It's tricky because now it says 1.17, but a while ago this said 1.34. And so I don't know why this changes a little bit at the end of the day. I want to stabilize this calculation and stabilize this rule. So I recommend not to use this rule yet because it's not solid. This rule is not completely solid yet. And so I still have it in the portfolio calculator. So I'm going to make this red and say don't trade it yet. Don't use this yet until I'm done testing it. But it takes more. I try to update this almost every day, and so it takes more than one day to test stuff. So I've got to go ahead and add it and test it. So let's go ahead and look at some of our other portfolios that we are trading. Now keep in mind, for the 200K portfolio, we were trading 2 micros. So 2 micros of the stock index portfolio is up about 6,000 this week. The 200K portfolio, let's take a look at how it's done. Let's turn this CVX off because we know that it has a worst case drawdown than that. CVX. It did make a worst case drawdown even with the CVX on. So it made a $52,000 drawdown. It's bounced 13,000. And this week it's up about 10,815. We've made about 6,000 in the micro stock index portfolio with much less volatility. These swings are pretty big on these days. We're seeing, in this setup, we're seeing big $7,000, $6,000 drawdown, $7,000 loss, and so working on account volatility with micros. And so let's look at the 50K portfolio. Both of these had a good day yesterday. finally the first real bounce back of the year. This is still a $22,000 drawdown. The worst case drawdown coming into the year was about $10,000, and just seen a massive spike. It's affected all of our strategies and E-minis. The Cobra 3 works well with the $2,000 stop losses at equity peaks, just to give you an idea of what kind of stop loss you would need. So it is still down. It is on the week. It is down on the week still too. It's up on the week, plus 1220 on the week, but it's it's going through quite the drawdown. And so CVX with the current calculation would probably improve this a little bit. Let's see here. CVX greater than 1, you don't trade, and instead of a $10,000 drawdown, it still would have expanded to a $16,000 drawdown. So let's look at the other portfolios. I'll be posting this to the portfolio calculator page. You can download it. Micro portfolio NQ20. We were trading this for a few days, and so we're looking at the last till mid 2016 as well as the last 10 years on this. So this is one micro. This is one micro. Let's see how it's doing, and it's up on the year. You can see how it's up 41K, up 35K, up 4,900. This is working now, and it's working in the past in the current modern market to mid 2016. If you delete the data going back to from July of 2016 back, you can see that the worst case drawdown is only about 5K per micro or 50K per E-mini, trading 20 NASDAQ strategies. We're still trading these same 20 NASDAQ strategies in the stock index portfolio 40, but we're adding 20 E-mini strategies to it. So how is the micro portfolio aggressive done? This is our oldest without changes on this list. The stock index portfolio 27 only had one change in 2021. This hasn't been changed since November 24th, 2020. And it tapped a worst case drawdown and bounced back. So this could be a portfolio to consider if you trade the micros. It does include gold, but it doesn't include gold reversal, which has been the biggest loser. So potentially, let's look at what it would do with just the E-mini and S&P and NASDAQ strategies on the micros. So let's look at what it would do. So this is a good set of strategies. It did make almost a worst case drawdown, which is the E-mini and S&P and NASDAQ. It is down on the year 987.50, one of our older setups. Let's look at it with the gold and see where it is on the drawdown. You see 54, 58.50. Add gold back. And you see it's at 57.87.50, 32.60 drawdown. It is down 17.77 on the year. And a new worst case drawdown. So gold has been one of the toughest markets to trade, gold and soybeans. So we're not trading those right now. We're not trading these portfolios. We are trading the stock index portfolio 40. And I like this setup. There's more data and information to use in the stock indexes. We can look at other markets, other market metrics. Whereas when you're trading commodities, you just purely look at that commodity. And with these volatile, wild swing moves, we just choose not to and stick with what works best. So let's look at the conservative version of this. So it's down on the year. It's also at a worst case drawdown. It includes commodity markets as well. Crude oil. Let's look at this. This doesn't include gold, but it includes crude oil. Let's see what it does without crude oil. This is the same. These are the micros from an old 200K portfolio. So let's look at what it does. Let's save that and see. It is down on the year 26.33. It's at a worst case drawdown. So Cobra 3 has been one of one of our very best strategies. Became our very worst strategy this year. Unusual to see a strategy that's just doing really well become your very worst strategy. It's like it almost feels like the market attacks your best strategy and is trying to get its money back. So what happens when we put this, once again, the CVX indicator is new. Don't use it yet, but I look forward to potentially using it in the future. As I'm not done testing it. With the CVX indicator, all these, this is at its worst, it holds its worst case drawdown. This holds its worst case drawdown, and it's up on the month. So beautiful. CVX indicator works pretty well. Want to make sure I'm consistent on this. This was 1.34 a while ago. Now it's 1.17, and I wrote 1.34 to the portfolio calculator. So I don't know why it changes. I don't want it to change on me. We don't want changing data in our setups. Let's look at the rest of the portfolios. We've looked at this one, or we haven't. I can't remember. Looks pretty good. Up on the year, holding its worst case drawdown. More volatility in the equity curve based on new volatility in the markets. And we've got micro NQ20. It's at equity peaks. It's at equity peaks with the CVX indicator. And is up 4,600 on the year. Without it, it is in a small drawdown, and it would be up 4,900 on the year. So up even more without it. So it's possible that the CVX indicator would not work, would make your portfolio worse. It's an extra rule. And your strategies may not be doing as bad as you think they're doing. We've already gone over the 50K portfolio. It would have reduced the worst case drawdown this year. The 200K portfolio would have reduced its worst case drawdown this year, but it still made these still made new worst case drawdowns. The 50K and 200K made worst case drawdowns, but not by as much with the CVX indicator. Stock index portfolio 27 with the CVX indicator, it has a higher drawdown, but it's at equity peaks. Let's see if that higher drawdown was this year or previous years. So it has a higher drawdown than previous years with the CVX indicator, which means that it prevented it from making money back while it was in a drawdown and making a worst case drawdown. So that's interesting. This looks really amazing, even though there is a higher worst case drawdown historically. Recent years, it's much better with the CVX indicator. Now the CVX indicator still always trades on Monday, so we got to fix that to make sure. Stock index portfolio 40. We're just looking at all these real quick with the CVX indicator. It's at equity peaks. It is up 6,500 this year. So we're trading what's working now. 65,000 on the E-mini, 6,500 per micro. Trading what's working this year. And you see these historical drawdowns are not as bad. They are very long, but they're not as deep. So let's look at, and by the way, I want to add the regular VIX. He could trade. This is also just based on the NASDAQ. So it's the number of turning points on the NASDAQ, and we're using that on all markets. So ideally, I'd like to add the CVX for each market separately. So you add a CVX for each market separately. You add the overall VIX for the stock indexes at FOMC day. That's a lot to add. So I want to stabilize how that works and then add those others. 500K portfolio, much improved drawdowns on a lot of these. So I like this. I like where we're going with this. Now this did make it worse. Just tap this worst case drawdown back here, and it's sharp rebound. So not trading when that number of turning points VIX is greater than the number of turning points on the NASDAQ. 131% turning points really helps, and it may we may find some. Once again, this is just for the we're just judging all markets by the NASDAQ. What happens if we judge each market separately? That's a good question that will take some more time to answer, putting more information together. And so let's look at the charts. Let's look at, I just want to look at these real quick. The NASDAQ $2,000 stop loss with the profit target. We've been using a $600 stop loss. Using a $2,000 stop loss or 200 per micro puts us at equity peaks. So, brand new equity peaks in Cobra 3 with the $2,000 stop loss. And you see with a $1,200 stop, no, this is the 2,000. No, wait, that's a gap continuation. My bad. This is the $2,000 stop loss. Brand new equity peaks. Gap continuation with a bigger stop loss of $700 made brand new equity peaks. This has just been one of our favorite strategies. Cobra 3 with a $1,200 stop loss did much better. Let's look at Cobra 3 regular with a $600 stop loss. And it just got beat up because it wasn't always wrong on direction, but that $600 stop loss was so tight, it just hit almost every trade was almost a loser. We've had one winning trade out of the last 16. So this is one of our hottest strategies in December. I mean, it just went straight up and it's taken all that back. And so, all right, that's the Saturday report. I'm going to click on the All Strategy Access Workspaces. You can pause the video if you want to compare. Take a look at each one of these. Just pause the video on each one. I'm not going to go over each of the 100 algos that we track. And keep in mind, we're just mainly focused on the stock indexes right now. We're going to work on those, trade what's working, cut what's not, and then come back to the commodities in the future as we continue to research those and figure out why. Are they as random? Are these commodity markets as random as they seem? Or am I missing something? This made a huge gain yesterday. Cobra 2022. Let's see where that lands. It's one of those markets one of those strategies in one of those markets that it can go through a long losing streak, and a couple of big winners can put you right back at an equity peak. We're trading that one. We're trading this one right here. And we're not trading this one, but it might be a good time to start trading Cobra 2022 bonds. So again, February the 12th, 2022, Saturday morning, research and analysis of our portfolio trading systems. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.